Hi traders, and welcome back with another video with the FX Big Dog. In this video we're going to focus in on the fundamentals this week and take a look at the trading outlook. Listen here traders, the weekly outlook's very quiet. We do have news though. We have news out in New Zealand that we're going to go take a look at, and we have news out of the US that we're going to go ahead and take a look at. A lot of technical analysis that are setting up trade opportunities. But we're going to go ahead and dig into the chart and see exactly what it is that we can go ahead and trade. I'll see you after this. Well, traders, welcome back. And yes, we're going to go ahead and take a look at the fundamentals this week and what we're expecting to move the market. Because at the moment right now, we've only got two real news reports that's going to make the market move a little bit more than what we expect. And it's going to probably break a lot of the trading daily ranges. Now, the two pairs, the two fundamentals we're talking about is the rate decision out in the New Zealand dollar. They're expecting to keep the rates unchanged, which could be, and normally is, a very positive move on that currency. But does the market show that? Does the technical show that? Because listen here, traders, I am not a fundamental trader. I'm a technical trader. And so, yes, I can understand what the news is doing and how it can affect the markets. But really, at the end of the day, I'm a technical trader. And we have to make sure that we understand it, right? You have to define who you are as a trader. Now, we're going to go ahead and take a look at the technicals based on that. We've also got news out for the US. Now, let's go ahead and take a look here at the calendar. Here's the calendar for the week. We have had news out this morning. Here we have it. Here, European news coming out this morning. You can see that the ECB President Draghi had spoken at around about 9 o'clock. Markets didn't move as much, but you can definitely see it around about 3 in the morning. The markets moved based on the French flash services PMI, the German flash manufacturing PMI, and the German flash services PMI. So when those three data came out this morning, the markets did move, and I'm talking about European or at least Eastern Standard Time. Now, what we do have on the agenda still for this week that we need to pay attention to is what's going on right here. Check it out. This is Tuesday. Tuesday on the 24th of this month, we're looking at 10 p.m. the official cash rate, and they're looking to keep the rates unchanged at 1%. Now, normally this gives a little bit of a move to the upside on the New Zealand dollar, but remember, traders, we've had a lot of global issues. All right, we've had a major global slowdown that's affected China. Of course, we've got trade wars that's still taking place. We haven't really seen any of the news come out saying that the trade agreements have moved in a good direction. Nothing like that has come out. I mean, that said that, yes, we'll continue to negotiate and we're talking and things look good. Things are progressing forward, but nothing saying, hey, we got a deal. No, nothing like that. And so if we go back to the chart right here, we're expecting to see possibly some movement out of the New Zealand dollar. Now, how it's going to move will all be dependent on the actual data. All right. Now, listen here. It's a no-brainer. We're expecting, of course, 1% to be unchanged. So it's going to be, the rate's going to stay unchanged at 1%. But this is the details right here. Like they say, the devil's in the details, right? So this is right here. The New Zealand, or at least the Reserve Bank of New Zealand rate statement is what we're going to go ahead and pay attention to. Now, traders, what we're also going to go ahead and take a look at this week is the news out in the US. And that is taking place here on Thursday. On Thursday at 8:30, we got the final GDP quarterly data. And you can see right here, they're expecting the data to come out at 2%. Well, we'll take a look and see how that's moving, because we're absolutely going to see some movement in the dollar itself. Now, this may just be far ahead of time, but as we go ahead and look at the data, let's go ahead and define what the market is telling us based on technical analysis, because the one pair that I've already seen some sort of resistance at the top is pound New Zealand dollar. So let's take a look at the charts. Going into the charts right here, on the pound New Zealand dollar, check this out, man. This is just awesome right here. Resistance, resistance, resistance. Backside of the trend line, check it out. There it is. Test the backside trend line. We just closed out, and I'm going to have to zoom in on this. We just closed out on a bearish candlestick formation right here. This is called, for those that don't know, this is actually called a evening star right here at the top. So we've got resistance here at the top, forming a we call it an evening star, and that evening star is telling us that the price needs to fall back down. Now we may have a little bit of a test there, but then it's going to fall down. Now hold on. If the market, and I'm going to come right into your face right now, the market, when the market sets up with these type of patterns at resistance, it is key. It's what we're looking for. And traders want to go ahead and take advantage of that. Now, this is the deal. When we get this type of signs, traders want to look for other alternative confirmations, right? Check this out again. I'm going to go ahead and move down to the 8-hour time frame. And if I go to the 8-hour time frame, this is my sentiment strength line right here that I'm using. Check what we see right here. Every time the market goes in and creates these turning points right here, we see change in direction. We've just got it on the 8 hour. So what are we saying? I'm saying that there's an early sign that yes, that the candlestick formation we've seen on the daily time frame is confirming that the bearers are starting to take control of the market. We've gone to the 8-hour time frame, and the 8-hour time frame is showing us that yes, that is true. The bears are in control of the market, and we're starting to see an opportunity here. Now, this is what I'm going to go ahead and do. Again, these type of signs are early warnings. Now, how do we deal with this? Well, there's a couple of ways to be able to trade this. One, we can go ahead and short the market right here based on the 8-hour, or we can go to for those conservative traders, you go to the 1-hour time frame. Now, what you want to do here, traders, is you want to go ahead and clear out everything that you got in your chart and focus more on the downward swing. Now, if you look at the downward swing, this is why I say that the 8-hour and the daily is more of an aggressive trading approach, all right? And the 1 hour is really taking what we've seen on the larger time frames and then waiting for us to get into a downward trend. This is what's telling me here. This is what the 1 hour is telling me right here. The 1 hour says that the bulls are still in control. You see these red lines right here? Well, those red lines are confirming that the trend is still up on the lower time frame. So we haven't started switching out yet. So there could be some upside move right here to retest, by the way, our wave 4 right there, and then come back down and complete our wave 5, and then we're going to launch a swing right here. So there's still going to be some sort of, bouncing back and forth between support and resistance. We're not going to get the confirmation. In fact, I'm thinking this. Again, this is just me thinking out loud, and you're listening to me right now. I'm thinking that we're going to go ahead and bounce back up. All right, see the market bounce back up, then go ahead and head down here, and then we're going to see a deeper correction move, and then the market's going to head up south. So this could take us in the next couple of days. It could take us all the way through to the end of tomorrow. And when the news comes out tomorrow with, of course, the rate decision out in New Zealand, and they keep the rates unchanged, if I'm thinking technical, man, I've got to get this wider. If I'm thinking technical, and I'm thinking about the market creating a technical bearish confirmation, then I would be thinking that the news out tomorrow is going to be bearish for the pound New Zealand dollar. What does that mean? That means that the New Zealand dollar is actually going to strengthen. Now listen here, you have to look at the alternative, right? So my first thought process right now would be thinking sell pound New Zealand dollar, just because the way it's set up technically. Go back to the charts, check it out right here. Let's reconfirm, all right? So we've got here, and this is the daily. We've got the daily confirming right here at the top. We've got a nice little bearish candlestick formation here in the form of an evening star. There we go, evening star. All right, we're expecting price to move back down south. Now, that's one setup. The next setup would be saying, well, if that's the case, then why would the market move back? Well, you see, the thing is here, traders, if I go to now the 8-hour time frame and I pull up the 8-hour right here, you can see it very clearly that price has moved up in this wave. All right, check this out. Price moved up, come back down. Yes, we had a bit of consolidation right here. Price moved up. Now that means that we're looking for maybe just a slight retracement before the market moves up. So the market can move down all the way down to around about 194, and we're trading at what, 197? So we could see about a 300 pip retracement down here. That means intraday traders can take advantage of that move. That's one. Number two, let's go take a look at the weekly. If I go to the weekly right here, check out the weekly. The weekly says to us that, man, yeah, we are still very strong bullish. So that means that, yes, this could be just a retracement move, not a whole bunch, then go back up north. Again, 194 would be probably the retracement level, or at least the max retracement level, before price moves back up again, and we could go ahead and hit that 2.0 mark again. So we could get back up there. If we're going to go to 194 up here, we could go up another 600 pips right here. Now, that means, traders, when I look at the chart right here, from a technical perspective, and only technical perspective right now, I'm thinking that we're going to get a weak pound New Zealand dollar due to the strength out in the New Zealand. So I'm expecting New Zealand data out tomorrow to be good and strong based on the statement that's going to push New Zealand, pound New Zealand south. But I don't think it's going to hold its ground for too long. I think that we're going to get some positive news out of Brexit. And that Brexit's going to go ahead and push the pound back up again. Now, I could be completely wrong, but I'm talking out loud and you're listening to me, right? So I'm thinking that this is what I'm anticipating. I'm anticipating that right now we're going to have news come out from New Zealand that's going to create weakness out strength out in New Zealand that's going to push the pound New Zealand dollar south. Then we're going to get some news that's going to go ahead, and it could be down here right about 194. And at 194, we're going to possibly get some bullish news that's going to be Brexit related, right? That's going to push the market back up again, because this is what my technicals are saying. And I know that my technicals are leading indicators and that my fundamentals go ahead and support what my technicals are saying. That's what we teach. We teach that exact same thing. So check this out. So this is the pound New Zealand dollar. Now I want to go to another currency pair, and I'm going to go to Euro New Zealand dollar right here. And I want you to look at the same thing here. This is the weekly time frame open right here. What are you seeing when you see the weekly? When you look at the weekly time frame, you're thinking over here that there is resistance. You're going to get some pullback. But you're seeing that the market's pretty strong bullish right now, and that we could go all the way up to retest this resistance at the top here as it stays inside this bullish channel. And this little retracement that we're seeing right now here is just a retracement before the price starts moving back up. So again, positive news out in New Zealand could drive this pair back a little bit deeper. Now, how far can the market move? Well, let's go to a 1 hour time frame. All right, let's take a look at the 1 hour saying here. So here's my 1 hour. And on my 1 hour, and I'm going to clear up my charts. Sometimes it's good to go ahead and just clear up everything. And I'm going to go ahead and delete everything. All right. And then once I've deleted everything, then I know I'm good to go ahead and start thinking about, let's delete that out the way too. All right. So once I've cleared out everything, then I'm going to go ahead and start off all the way from the top. I'm going to use my Smart Wave tool here on Smart Trader. All right. If you don't have smarttrader.com, please go ahead and visit the website. They do offer some free services there. You definitely want to check that out. All right. Now, if you are a client or a student of Market Traders, of course, you have access to that already. But for those that don't, please make sure to go ahead and check it out. Smarttrader.com. That's what it is. Now, I'm going to go ahead and extend this wave, and I'm going to have to delete that and do this. Extend this wave all the way to the top here. Now, this is the larger wave right here that I'm seeing. So I'm expecting, at this point in time, I'm expecting price to move down. But this is a second wave. Now, this is a huge wave. And because it's a big wave, I'm going to go ahead and move this down to a daily time frame. And I'm going to check this out on a daily. And I'm going to compress a little bit right here, just so I can get some more data in here. All right, that looks good. All right, so if I look at the daily, wow, this is interesting on the daily, isn't it? The one thing I'm noticing right here is I'm noticing that we do have support here, support there. This is a bullish channel. We've got resistance up here, resistance there. We're now hitting resistance. So what does that mean? Price is going to move back down. So New Zealand, Euro New Zealand dollar is expecting a bearish move to the downside. Now, the question here is, do we have a bearish candle? Now, if you say to me, big dog, check out the wave 2 right here, we should be expecting price to move down here. I see that, all right? I see that. Don't tell me I don't see that. I see that. But hold on a second here. Let's just look at what we're seeing right now in the short term. So I'm going to go ahead and zoom in a little closer up. And I'm going to go ahead and move that down because I want to see what's going on right here. Oh, I have to go and zoom in way too much here. All right, so I've got this right here, and I'm seeing, this is interesting right here. Give me 1 second while I readjust this chart. And I'm seeing this, and I'm zooming in very closely right here. You see that bearish candle? All right, there it is there. You can see it right there. See that bearish? I've zoomed in plenty right now. But you can see that bearish candle right here. All right. Now, that bearish candle is indicating that price is actually, in fact, going to send the market back down south. That is called a bearish engulfing. Now, bearish engulfing is a bearish candle, and it's right there at the top. And we can expect price to go ahead and move down. Now, traders, while you're busy checking that out, I'm just going to go ahead and do something here. I'm just going to go ahead and reset this up right here. And I'm going to go back to Smart Trader right here. All right, I'm just resetting the charts, going back to the charts right here. All right, so we saw the market go ahead and create a very, very cool setup on the daily time frame. A huge bearish engulfing candlestick formation, right? And that's cool. Now we're going to find out how we can take advantage of that bearish candlestick formation. There it is there. I'll try not to zoom in as much as I did just now, but there it is there. It's right at the top. You can see the bearish candlestick formation. Here's the data. You can see there it is. Now, what I'm going to do right here, traders, is I'm going to go ahead and move this down to a lower time frame. And there's the 8 hour. Check out the 8 hour. The 8 hours are already starting to show us that price is moving down south. So Euro New Zealand dollar, Pound New Zealand dollar, both of them are showing us that price is starting to fall south. That is a clear indication that something's going down technically, and maybe the fundamentals are going to go ahead and follow up and catch up to the setup right here. Now, this is not the only thing that's moving. I know I said I want to speak about the US dollar as well. We got GDP coming out, quarterly results coming out, the final GDP this Thursday, and we're going to look at the US data, right? That's the US data coming out. We'll look at the data, but more importantly, we'll look at the technicals, because the technicals is what's interesting right here. Let's go into, we've already established we're expecting GDP to come out at 2%, right? That's the forecast. But let's go take a look at what dollar index is doing and see how the dollar index is setting up for an opportunity. Well, check that out. Already on the 8 hour time frame, we're starting to see price starting to rally back up north. Now, if price is rallying back up north, what are we seeing on the large time frames? I mean, and you're probably saying, well, Big Dog, did you not tell me that the market's going to drop back down to support a few weeks ago? You said that price is going to see us down here, and we're going to drop back down to this level before we go back up to that level. Yes, I did. All right, I did say that, all right? But I know that price can move at any time and start heading north. This is where we anticipate price to move, but it can turn around at any time. Now, hold on a second. We're not out of the woods yet, because this price can do this as well. Then turn around and head back up north. So we can see that we're definitely inside consolidation. And the biggest problem that traders have in consolidation is they fail to predict what the market's going to do. It can eat you up and spit you out alive with this type of setups. All right. So you got to be careful when you have these type of setups right here. It can be a little bit tricky. All right. And the best thing for you to do as a trader is to go ahead and rather look to buy at support, sell at resistance, and not trade in the middle of the road. Because what happens in the middle of the road? You get run over. And so you don't want to have that scenario. In fact, I got a very, very nice sound for that. In fact, it sounds something like this. When you're looking at getting in at the middle of the road, and my good friend Mark Webb will hate me for this, but I'm going to go ahead and do it. All right. So when you go ahead and trade in the middle of the road, this is the type of sounds you hear. That's what I'm saying. All right. That's what I'm saying. So we are going to be extremely, extremely cautious when trading in the middle of the road. Now, this is the dollar index. So the dollar can go anywhere right now. It's in the middle of the road. It can go up. It can go down. We pretty much should be on the sideline. So the data coming out on Thursday with the GDP, it's going to be great, because it's going to either push it up or push it down, but it's at least going to get us to resistance and support so we can start making decisions. And if we get candlestick formation forming at those levels, we can start trading them, right? So let's wait until Thursday. Let's wait until the data comes out Thursday and we'll start figuring things out then. But one thing that I want to go ahead and show you before we close is the Aussie CAD. Aussie CAD, listen here. For short trading opportunities, here it is right here. All right. The Aussie CAD is setting up an opportunity right now. All right. Now I'm going to go back. Just don't go away yet because I'm still going to talk to you about the pound and New Zealand dollar trading opportunity. Haven't done yet. All right. Check this out. Now, this setup right here on the Aussie CAD is telling us traders that we should be selling. In fact, we spoke about it in our session today. We had a smart trader wave count session, and we looked at this right here. We looked at the market creating this bearish candle right here. Now, why is that important? That bearish candlestick formation is important right here, or at least that bearish candle is important because it's come back inside this consolidation. Now, when you look at the daily time frame, it gives you some sort of information, but what's important, traders, is this. When you go ahead and you compress your charts a little bit, and maybe I have to even go to the weekly time frame, and yeah, it looks like I may even have to go to the weekly. So let me go to the weekly right here, open up the weekly, compress the charts up a little bit right here, and you can see something happening right here. Check this out. Can you see here? All right, take a look right here. Notice that price has moved up and gave us a wave forward in this inside structure. All right, wave forward. It closed out with this huge bearish candlestick formation. Are you kidding me? That tells us sell, 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 right? It's telling us to sell, sell, sell. So there could be a retest, but then it's going to go ahead and sell. Now we could drop back down to around about 86.71. So sorry, 87.71. So 0.87. Let me write it down here. 87.71. That's the target for the downside move. All right, at least target that. This is my fifth wave right here that I'm expecting price to move down. So Aussie CAD's looking for a sell-off, and we're going to go ahead and trade it. Let's see where we are. We are at 89.72. So we're looking at about 200 pip to the downside. Now, trade is very important. All right, how do we get in on this trade? How do we trade this trade? Well, the first thing you need to do is go to the 1 hour time frame. And you're going to love this. Close out everything you got open right here. All right? Just kill it. Just take all your data, all your indicators, or not your indicators, but all your drawings off the chart. And now we want to focus in on this downward move. I'm going to go ahead and put my smart waves down here. There it is there. And by the way, where are we now? We are here at a fifth wave. What does that tell me? That tells me, traders, that price is going to come back up again. When it does, that's going to be the opportunity for us to sell. So right now, Aussie Canadian dollar, I probably don't want to get in on that trade right now because I'm thinking that it's going to start retracing. Now think about it. The weekly time frame closed out with a huge candlestick formation, which means that there could be a retest of that. And the retest is really confirmed by looking at this 1 hour time frame. The 1 hour time frame waves have actually confirmed that price may look to retest, come back retest before heading south, because on the larger time frame it's a retest, but on the smaller time frame it is a correction move in a larger downward move. That's what we do. All right, so we're going to go ahead and wait it out. We're going to wait for the market to go ahead and set up. Now this is what it looks like on the weekly again, right? I'm just going to refresh your memory right here. This is the weekly. All right, there's a candlestick formation over there, right there at that and I'm going to go ahead and just move it up. And let's just delete that. All right, so this is what it's doing right here. This candlestick formation right here is going to be retested. Then it's going to start working its way back down. So you might see about 100 pip pull back. As the market pulls back, that's going to be opportunity to go ahead and sell. Put your stop above that level right there. And sell, sell, sell. Wait for the signals and then go ahead and sell. Sell it towards this level right here, 87.81. Well, 87.81. Nope, sorry, 87.71. My bad. That's the level you're going to look at. Now let's get back to the pound New Zealand dollar. I said there was an opportunity on pound New Zealand dollar. And here it is right here. Pound New Zealand dollar. Woo! All right, check it out. All right, pound New Zealand dollar. We said that pound New Zealand dollar is setting up right here. And we said that this could be just a shallow retracement and then a move to the upside again. So the question here is, how do we sell if we are going to sell what do we do right here? Well, this is what I would do, right? Firstly, number one, we got a nice confirmation here on the smaller time frame. This is the 8 hour. So the 8 hour says that yes, we could see a market sell off. Now this is offering us a very, very tight stop loss. Let's check it out. I'm going to go to the chart right here and let's take a look. So I'm going to measure out the distance from here to about there. We're looking at oh, this is 200 pips. No, this is not cool. All right, so this is not cool. Let's see, that's 200 pips. If I said the market's going to drop 200 pips, then put in a 200 pip stop loss is not cool. All right, that is not cool at all. Let's go to the 1 hour. Check out the 1 hour. Okay, yeah, we can place a little bit of a tighter stop. All right, so what we're going to do is we're going to be patient. We're going to wait for the market to pull back up again. Now, the market is not going to go past this level. All right, let me go ahead and mark it off. It should hold up at that level. In fact, let's do a little bit more up right here. I'm going to drag it up to about there. All right, so that's the level there. 98, so 1.9884. So we're expecting price to come back to retest this as a max. Now, anywhere in this zone, right, where we've got the 382 bounce, anywhere in the zone right here, which is anywhere between, it looks like 198.32 and 198.84. So 198. 30, my bad. Just do that again. 32 to about 198.84. All right, so this is the area between these two prices right here is where we're anticipating the correction to take place. Write this down right now. Write it down. Now, when it gets into the zone, we're expecting price to move back down. Now, this is the deal. Where do we place our stop loss? Listen here, traders, if you want to place your stop loss at the safest place, it is no doubt going to be here at 99.80. So let's put it 99.80, above that level. That's where you want to put your stop. Now, how far is that going to be? Well, that's going to be possibly about 100 pip stop loss. All right, 100 pip stop. That's the safest place to put your stop loss in this move. Now, if price goes ahead and falls down, what is our profit target? Because we have to look at risk-reward ratio, right? And if we look at risk-reward ratio right here, we're looking at approximately 200 pips on the downside. That's okay. All right, so this is the deal. You have a choice, all right? And let me go back to the chart. You have a choice, and your choice is this. You can go ahead and place your stop loss 200 pips away from the market, all right? But placing your stop loss 200 pips away from the market, you're placing your stop, not 200 pips, 100 pips away from the market. You're placing your stop in a very safe place, right? A very safe place. But if you want to be a little more aggressive on your entry point, then what you want to do is you want to go ahead and place your stop loss, all right, just behind a candlestick formation. So when you get the market trading inside that zone, remember the zone we spoke about, right? The turning point. If you get into that zone, and the market then at that time starts to turn around with some sort of bearish candlestick formation, you can go ahead and place a stop loss behind that, maybe 10 or 15 pips. And it is going to be aggressive stop loss. It's going to be very tight, but the reward on the downside is going to be very, very profitable. In fact, you may even look at a 1 to 4 risk-reward ratio, which means your stop loss may be 50 pips, maybe even tighter than that. And if you've got about 200 pips to the downside, the risk-reward ratio looks great, all right? And so this to me looks like probably one of the trades of the week this week, knowing that we're going to get some data coming out this week. That data is going to be positive New Zealand. That's what I'm anticipating, positive New Zealand, which is going to push the pound New Zealand dollar to the downside. All right? So this is what I'm expecting. Hey, listen here, man. Thank you for joining. Thank you for watching. By the way, South Africa is going to win the World Cup rugby. That is no doubt. New Zealand, we're coming after you. We lost this time round. All right, this weekend you took the first one, but we're coming back. We're going to win the World Cup. I say South African victory the World Cup for 2019. All right, traders, well, don't talk to me about the Eagles. Of course, the Eagles lost this weekend. Very, very upset. Don't upset me anymore. I'm trying to focus on the markets, but we're going to go ahead and talk about the Eagles next week as they take on another win. Yes, they're going to win. They're not going to lose. It's going to be great. Traders, thank you for watching. By the way, if you want to go ahead and follow me on social media, there it is there. Go ahead and follow me on Facebook, Instagram, and Twitter. And I'll be posting some more videos on YouTube. Make sure you go ahead and click the subscribe buttons so we can go ahead and get you more videos, and hopefully educate you more on the market. This is the FX Big Dog, and I'll see you next time.